All right, what's going on, everybody? Let's go ahead and share my screen, hop right into it. We are going to go and talk about the markets, where we're at. I do want to talk about gold specifically. I want to dive deep into gold. And I mean, let's just go straight into it. Let's see what's popping off. Let's go to the monthly candle. Let's go to the monthly time frame on gold here. This is just unbelievable. Look at this chart on gold. Okay. Look at this chart. I'll get rid of what is this? Favorites. Let's hide that down here. All right. Look at these peaks and valleys on XAU USD. This high in 1980, during the highest period of inflation that we had in the United States. We had our 2011 rally. That was right, really kind of during the 2008 recession that we had, the global housing crisis that was occurring. Here we have the 2011 peak that finally got put in. We stabilized, and here we had some consolidation. Now I mean, look at this chart. Look at these monthly candlesticks. Like, let's really zoom in here. And I mean, just look at these candlesticks on gold. This is insane. The amount of institutional buying, the amount of retail buying, central bank buying that is happening right here is insane. I mean, are you kidding me? Look at these candles over here. Okay. And I have to go to a clean chart because clearly I'm just gonna mark everything up here. Just get rid of everything. All right. Okay. Let's look at this real quick. Look at these monthly candlesticks from 2011. Okay. They're not nearly as bullish. I mean, they're bullish, right? Like, I guess if these were the only, like, if this data hadn't happened yet and we were looking at the same chart, it's almost identical. The amount of volume, look, 29%. That's that's crazy. So yeah, I guess it's comparison to the amount of value. So you know what? It's actually a very similar rally here. It just looks like it's capitulating beyond what we've ever seen before. But in my opinion, that is some crazy volume on gold. I want to ask you a question. What do you think that means? What does that mean if money, liquid dollars, and foreign currency is flowing into gold reserves, ETFs, contracts, whether you're trading it, whether you're buying and holding physical gold with reserves? I mean, that's a lot of monthly bullish candlesticks, right? I mean, look at that. That is incredible. We are probably in a state of greed in this market. Look at September alone. And this is really what I want to focus on. Look at September alone. Are you kidding me? That's insane. 11% in 1 month for gold? What is going on? You know what I mean? So if we look, okay, at some articles here, right, it will literally tell you that this new high significantly surpasses previous records, okay, due to factors such as geopolitical tensions, inflation concerns, and shifting global financial dynamics. Historical milestones show gold reached 850 per ounce in 1980. That was over here. Over here. This was 1980. Same look. Look at this. Same rally. You see, look, same run up. Look at that. Look at those monthly candles. Unbelievable. During an inflation crisis and an oil shock. And 1921 and 2011 amid the US debt ceiling crisis. Okay. And then look, that was over here. This was 2011 when we had our debt ceiling crisis. Boom. Look at this right here. You see that? Well, what's changed? Clearly nothing, right? Look, now these are surpassed by the 2025 highs. No shit. That is insane. This chart is insane. I'm telling you, this chart is insane. What does it indicate? De-dollarization, lack of trust in American institutions, the lack of trust in our ability to handle our finances. Our global debt is surpassing $38 trillion. $38 trillion. Oh, what? They want me to play the fucking lottery? Jesus Christ. $37 trillion. US debt held by foreign countries, $9 billion. So let's do the math on that. 37. Okay, that's million. It's the number's so big, we got to turn the calculator. There's 37 billion. We need like 2 more zeros. Boom. 37 billion divided by 9 billion. They own 40%. Foreign countries own 40% of our debt. That's insane. Do you know what would happen if foreign countries were to sell all of their bonds and all of their treasuries, and they said, you know what, fuck you, United States. We're going to sell all of our, we're just going to take the hit, right? We're going to take the hit on interest. We're not going to buy any more 30-year treasuries. We're not going to buy any more 10-year treasuries, 5-year treasuries. We're going to Bitcoin. We're going to gold. We're going to Swiss francs. We're going to Japanese yens. We're going to euros. We're going to fucking Chinese yuans, right? That is why gold is doing this. That's why gold is doing this, because you're seeing a lack of faith in our government, in our institutions, in our democracy. And I'm not trying to scare you. The charts don't lie. Charts do not lie. If we were doing good as a country, gold would look like this right here. If we were doing really good as a country, gold would be consolidating. I do not love that color. Let's go to this color, right? We want to see gold consolidating. If gold's consolidating after peaking, that's a good thing. We have not peaked yet, and we're still going up. If we compare that with the dollar index, not good. Not good at all. Look at this, okay? Look at this monthly chart. Look, this was 1985, okay? 1985 was here. 2001 was right here. Look, 2022, boom, 2025. I'm not a big trend line user here, okay? Not a big trend line user because they're really, I mean, look at that, right? That's irrelevant. But from this high to this high here, that looks like a lower high. That looks like a lower high. That doesn't look really good for the dollar index. Look at do you see the melt off here? Look how it just melted off every single month. See this consolidation here on the monthly? You see like consolidation here, consolidation here, consolidation here. That's what you're seeing right here. I'm anticipating the continuation of this chart going down on the monthly time frame. We should continue to see bearish monthly candles. I don't see what would make the dollar valuable and attractive at this point in time at all. I don't see it at all. At all. And that's it. That's it for the video. Like seriously, when we're talking about charts, when we're talking about finance, we're talking about economics, we're talking about financial infrastructure, talking about how money works, how money is transferred, how wealth is transferred. And these charts, you're looking at charts, you understand what's happening, the price of goods and services, how we denominate things. When you go pay for goods and services, when you go buy a coffee with your dollars, when you go buy a house with dollars, the dollar is so inflated, it's worth shit. It's gonna be worth nothing eventually. Eventually, it's gonna be all the way down back here. I mean, I'm looking at 79. for the dollar. I don't even think we're going to be at, I don't even think we're going to be at parity. I don't even think we're going to hold it. I just don't see the dollar holding above this level. And even from a perspective of technical analysis, like look at wow, that is just insane. Just lower that. Look at this high here. Okay. You see how this 100, you see how the 100 valuation, that's parity. Okay. That's equivalent to where we want to be all the time. Look how we resisted off of there. We went back up, resisted, broke it, used it as support, went higher. Great. Beautiful. We drove down, retested it here in 2003, and then we dropped all the way to here during the recession in 2008, all the way to 72. It took us a long time to recover as a country. Like, think about it from a fundamental standpoint, not just money, from a fundamental standpoint. Look at how long it took to recover. Okay, guys, that speaks volume that from 2008, we finally got back to 100 even around 2016. And then 2016, we resisted. Boom. Here we go again. Boom. Came down. COVID happened. Look at COVID. COVID was here. See how COVID drove it down again, right? What happened? Interest rates go up to combat inflation because we had record inflation after COVID. Interest rates are higher. They're paying out 5.5% on treasuries. Boom. You're going to eat that up, right? Because if you have a fixed income, if you have $20 million and you're earning 5% on 20 million, you're doing pretty good. You're doing all right. Then what happened? Here's what happened. We drive up the dollar because of treasuries. We're paying out high interest. The federal overnight funds rate is really high. So you're gonna have people wanting to hold dollars. It's just a better return on investment. What happens? Inflation peaks and interest rates stay steady. Once the markets think that inflation's coming back down and the Federal Reserve is going to lower interest rates, that's when the dollar starts to trickle back down. So then we see some consolidation. Boom, 2025. We drop lower here. So notice this level. This level is very, very important. Look at this level right here, okay? Do you see how this monthly candle, you see how July went back up, retested it, and then August respected the 100 level perfectly? Do you see that right there? We might continue to see a lot of bounce play from that 100 level. I am convinced that we are going to see lower dollar prices. I am convinced that we are going to see lower dollar prices. It matches up with everything. It matches up with everything. This is not sustainable for the dollar at all. So if you're doing charts, if you're a trader, if you're in economics, if you're in finance, if you're in global markets, you're an advisor, it doesn't matter who you are, where you come from, okay? We have a lot of challenges ahead for this country. If we want to remain powerful and influential, and we want to remain a global power with money especially, there's got to be some magic hiding somewhere. We got to pull the rabbit out of the hat for us to recover from this. We owe way too much money in debt. We've completely created a very difficult environment for friendship and diplomacy with our foreign adversaries and our friends, our alliances, okay? Like, we've made it very difficult. Not tariffs. Tariffs is another, we have no idea what tariffs are going to do the next 2 years at all. If anything, it might make, you know what's actually crazy? Inflation might tick up again, and we might raise interest rates again. Now, if the dollar does pick back above 100, if we have to raise interest rates to combat inflation again, that's the only way I see the dollar going back above 100. Other than that, I see it going lower. And like I said, with gold, same thing. Like it's just not sustainable. It's this chart is unbelievable. It's just unbelievable. It continues to literally make all-time highs in a beautiful trending Elliott wave motion. It's just beautiful. Like it is so beautiful, this chart. It couldn't get more beautiful than that. Like seriously, it does not get more beautiful than that on a 4-hour time frame. So we'll see if we have another retracement here. I'm thinking we do, and then another leg up to that 38.50 level. That's what I'm seeing here. So we'll continue to look for longs on gold. Definitely take shorts when we have shift in structure. But other than that, be aware of where we are. Be aware of where we are on a global scale, because it pays to be informed. It really pays to be informed. I hope you all enjoyed the video. I'm gonna go ahead and stop the recording here, and I'll see you all on the next one. Peace out.